Foschini consists of 14 trading brands and sells fashion, jewellery, accessories, cosmetics, cell phones, homewares and more. I don't think there's anything else that you could sell.
Well, the homewares, of course, is the at-home brand, so that's well worth noting.
Phase
you go to
8
a
as
mall
well.
and they've got yes, Phase 8, but Phase 8, of course, is Europe.
Yes, it is, which could have the same issue as Brexit concern.
Could definitely.
So anyway, we're getting ahead of ourselves. It's trading on a price to earnings ratio of 13.9, a dividend yield of 4.8 and a market cap of 30.8 billion rand.
Big player. Yeah. Grant, what do you think of these guys?
I do like all the brands. I mean, there are a lot of brands, so I guess one question is, could they not benefit from a bit of consolidation? But the opposite to true is for me, high quality brands, your Fabiani's, your Due South, getting a bit of sports exposure in Total Sports and Due South, which obviously informed the whole sport decision. You're getting at-home exposure. So overall, from a quality perspective, I do like this company. Less credit sales and also far more control in the inputs. It
And
gives
they've got
them
a
bit of
hotshot
margin.
FD in Anthony Thunstrom,
Oh,
who
yes.
came from KPMG.
My running buddy Anthony, who seems to be doing very well. He's not only running the financial aspect of the business and Phase 8 and the funding on it, but also took over the entire sort of credit book. But of course, he reports to Doug Murray, the CEO, who's been there a long time, and just some nice continuity there.
It doesn't look as though we're going to lack any enthusiasm on this stock. Just looking at our share price graph there.
Yeah, so the surge in late 2015 is because of the Phase 8 deal. They purchased it at a good level. Then, since then, but bouncing around. So now it looks better, though.
Could
It's
this
got a good
be the
to
start
2016.
of better things to come? What do you think, Grant?
I do think so. I mean, I do like the stock. I think with a pullback, like we saw last week, this is an opportunity to pick up a good quality retailer. There are, of course, concerns about Phase 8, but it's also a higher LSM consumer, 35 to 55-year-old women's wear. But what does concern me is just the online presence that it has. It sells quite a bit into the rest of Europe. So I guess those concerns are reflected in the share price at the moment.
Why are you much more positive on Foschini than Truworths? What is Foschini doing right as opposed to Truworths?
I guess it's just a personal experience when you're walking into all those different shops, their layouts, their level of service from their staff. I just think that there's definitely a better brands in there, better quality clothing. So, I mean, that's my quality argument.
Paul, besides Anthony being your running mate?
Well, that counts for a lot, But I think it's also the fact that the mix is a little bit better. So some of the jewellery and some of the sports gear is more aspirational. And it just feels like they've reduced risk in the business because they've taken out the RCS business. So that was retail
Which was the
credit
credit
solution. So effectively, they still have the business that offers credit on cards in store, but they used to own, in addition to that, an additional retail credit book, which they owned, and that was ultimately sold, with Standard Bank exiting as well to BNP Paribas. So, I mean, it all adds up to, I think, a slightly different mix. And again, very cheap. Look at that, price-earnings ratio close to 14. So there's not all that much factored into the future that we...
And again, it's a relative play. So if you're looking for an entry point, this is a more attractive entry point, given the concerns that you've shared over something like Truworths. Hot or not?
I'm hot on this one.
Hot or not?
Yep, hot, bought it into the portfolio, so that means it's a long-term hold for sure, hot.